Temple Ashaju, our business correspondent from the trading floor at the Nigerian Stock Exchange, is doing some of the NSE asset data check for us this morning and the opening calls for the third trading day of the week. Temple, good morning. Welcome to the show.
Good morning, Bosun.
Great. Let's hit the ground running.
Well, we haven't seen so much in the market. It's still some mild losses, some 0.03% decline so far in the market all day. There hasn't been so much deals as well. In total, we only have around 6 million deals so far. So traders are still, just resuming actually to kick off the trading day. There hasn't been any serious trades except around Africa Prudential, where we've seen some retail demand and some folks trying to check the likes of FBN Holdings, which actually recorded some gains yesterday.
Yes, Temple, but if you do a bit of a data check for yesterday, and we do apologize for that, audio there is getting a bit very cracky and noisy. We apologize to our viewers. If you look at the market, yesterday, in terms of the stock market, I look at those 5 subsectors, and the consumer goods index was unchanged. As Ayodi Jebo said earlier, this is one of the hardest bitten index year to date, about 30% in negative territory. This land border closure is not an icing on the cake for those folks in that space.
You're correct, Bosun. It's not because again, as folks that we had earlier had talked about it, it's really something that in fact has also contributed to the rise in inflation that we saw reported by the National Bureau of Statistics yesterday. So a lot of investors are really not happy about that. I think folks in the rice production industry, the growers, are the ones that are really enjoying these land border closure at this point in time. But if you look at portfolio investors, it's not too good for them because the companies that they have really bet on are really not enjoying the benefits of export or imports of some of the materials that they really need to produce their materials locally with flour mills or Honeywell, Nestle, name it, all of the companies. In fact, the unlisted companies as well are feeling the brunt of these particular land closure. And of course, we talked about an AFCFTA-based meeting that held yesterday in Lagos. It was part of the conversation of the lips of these CEOs, chief executives of companies, and of course, top executive directors that were in attendance. They think that this is really, really going to have an implication on the AFCFTA implementation, which for now, a lot of these companies would have been weighing the implications on their businesses. Where did they need to adjust? Where did they need to make amendments on, and all of that. So basically, it's a major concern at this point in time, Bosun.
Yes, a very interesting scenario. But again, we'll try to keep an eye on a number of stories and issues around the marketplace. Let's see how the markets react to these consumer goods. So it's a sector, including industrial goods as well, because some of them also ship some industrial goods across border, get raw materials across as well. So it's a two-way traffic. Let's keep an eye on these 2 key sectors, Temple, for the rest of the day, and maybe for the rest of the week, begin to see the impact on them. Thank you so much for coming through.
Right, Bosun.
Yeah, thank you. Temple Ashaju from the stock exchange trading floor. Let's get a bit of a sense of our fixed income space. It was relatively flat, if not totally, almost quiet yesterday on the Naira bond market via the FMDQ. And that's where one of our traders, Chioma Udu, is joining us this morning. She's a fixed income dealer with GT Bank. Chioma, good morning. It's good to see you. For quite some time, really.
Yeah, good morning, Bosun. Quite some time, I agree.
Yeah, for quite some time. Yes.
Yeah,
yes.
it is.
So I know the Treasury's asset is where most of the activities are, but let's spend about a minute to talk about the Naira bond market. It's been lackluster weeks on weeks and weeks on weeks. What exactly is going on there? What are you dealers and investors looking for? Is it just going to continue like this while we put most of our focus on treasuries?
Like you said, most of the focus is on treasury bills. Today there's an auction, PMA auction. About 151 billion is on offer, with most of the assets being sold at the 1 year. For the bonds market, it's been quiet, with rates trading at about 14.4, 14.3. We see that because a lot of investors expect that yields are going to trend up because of what we're seeing in the Naira leg, which is the FX market. We've not seen a lot of FX inflows because the central bank hasn't been able to meet up all the demand in the market. So we've seen a lot of outflows instead of inflows into the market. So market expectation really is that there's going to be inch up in yields.
Are we running through some rough patches at the moment in terms of the currencies or the currencies market? Is there some liquidity issues here?
We've not seen a lot of liquidity in the market. I say this because for all the maturities we've seen come in this month, we've not been able to fully roll them over. So what we see is some outflows from investors, and then that has put pressure on the reserves. Reserve is currently about 41 billion, which is 8.5% lows from 45 billion we had seen in about June, because the central bank has come into the market to try and intervene and meet the needs of the FX in the market.
Okay, so let's talk about treasuries. Do you think this PMA will be coming through the current market yields? How do you think the pricing will be done by the regulator?
For today's treasury bills PMA, we expect there's going to be a lot of interest. Like I said, we've not seen a lot of assets to take out the rollovers that we've seen. There's going to be a little pressure on the rates, but we expect that the 1 year was going to close about 13% discount.
Okay, so were you guys shocked with the inflation data, 11.24% that came in yesterday? How are you folks treating that?
Yes, it's been expected. This is as a result of the closures in the borders. Surprisingly, where we saw the attrition, the movement in the computation is on food inflation, and it is harvesting season. So that shows points to the fact that most of the food we get is imported from across the country, and the closure of the border that hasn't helped. We have priced that in the market already. We expect that the central bank will come into the market and offer more yield so that it won't put pressure on the FX market.
No. That's when we're already looking at treasury yields around 11.5%. That means I'm looking at the yield curve heading this way.
That's on the short end of the treasury bill curve, 11 points. We see 11.5, but the long end 1 year, we should see 13 upwards.
So how long do you think this will last?
Okay. Under discount.
How long do you think will last, Chairman?
We think that the treasury bills space is going to, on the long end of the treasury bill curve, will remain at 13%. This is to really attract the foreign investors who help us with FX liquidity. And I think the central bank has said that it's going to keep the foreign exchange stable. So I think 13% upwards will last for a while. Yes, it should last for a while.
Thank you. It's good to see you, Chairman Udu. Thank you. Fixed income dealer at GT Bank from FMDQ Exchange Place. The Central Bank of Nigeria is ready with the latest edition of what is called the Financial System Stability Report. That we'll talk about here on the program here tomorrow. So I'll see you then, everyone. Have a great day and goodbye from Lagos.